Welcome to Bonkers Economics Christmas edition and this special Christmas image I've designed for the season. And what does it show? Well, across the top we've got a string of baubles and they are scaled by size to reflect the wealth of each 10% of the UK population. And here we've got the wealthiest, the richest 10%, and they've got about 40% of the total. And down here at the bottom, well, we've got the least wealthy, the least well-off 10%, and you can hardly see them there on the left. And they've got basically no wealth at all. And in between, we've got gradations, as you can see, but a vast amount of wealth is concentrated here at the top. And in the Christmas presents below, in these two, you can see something that's changed massively from the 1980s to today. And what we've got is the distribution of ownership of the UK stock market. It's not just the biggest stock markets, but all the publicly traded stock markets in the UK. And what they show is the share of those stock markets, the share of the shares which are owned by different people. So in blue, we've got UK-based insurance and pension funds. So that's basically funds into which we pay money and which are investing in the UK economy, as you can see here. And next to them in green, we've got private investment in UK stock market. So that's private individuals who've got enough money to spare to invest in UK stocks and shares. And then the label, little yellow label there, well, that's the amount of the UK stock markets that were at that time owned by foreigners. So that was the situation then, and now look at the situation now, and things have changed very significantly. So here again in blue, we've got the amount of the UK stock market owned by UK pension and insurance funds, and it's very, very small indeed. And the amount owned by private individuals has also shrunk very considerably. And look what's happened. Well, the vast majority, well, at least well over half, nearly getting on for 2/3 of the UK stock market is now owned by foreign investors. So the UK has sold itself abroad in a big way. Foreign investors are drawing wealth out of the UK at a faster rate than ever before. And what does it mean to look at these two things together? What's the connection between the two? Well, the connection really is that the approach of the economy, what the economy is structured to do, has radically changed. So the economy is no longer structured to create real wealth. It's no longer prioritizing keeping the wheels of the real economy turning, putting money where it's needed to create real wealth, putting money where it's needed to improve the quality of our lives, to make us all feel better, to make us all live better lives. It's now structured with one thing only in mind, and that is to increase the wealth and the asset ownership of already wealthy individuals and corporations and that sort of thing. And we see that, of course, in the distribution of wealth in the UK, that this wealth is increasingly concentrated in the hands of the already wealthy because their assets have increased enormously in value, because that's what the economy is designed to do. And that also means that because these assets have increased in value, they become much more marketable, much more desirable for foreign investors. So foreign investors are buying into the UK economy, this big, great yellow label here, because they can get capital gain. They can buy cheap and they can see the price increase and they can sell for a higher price. So it's all about financializing the economy. It's all about making the economy about capital gains, if you like, rather than about creating real wealth. It's all about extracting money, extracting wealth from the economy, packaging it up and putting it in the hands of the already wealthy. So I'll keep this video short because it's Christmas and you don't want to spend too long looking at YouTube. That is the basic picture. The connection, as I say, is systemic, it's strategic, it's designed to change the way the economy functions in the interests of the already rich. And we'll be looking at this theme further in next few episodes of Bonkers Economics. And next year, into 2026, we'll be starting a whole new series on why the economy is not working and what we can do about it, which is, let's face it, a much more important and interesting question. And that will run us right through 2026. It'll be a connected series of videos trying to build up a picture of how the economy works, how it's not working, and how it could work much better. So I look forward to sharing that with you. In the meantime, have a great Christmas, and in the new year, we'll be back again to talk about all these things.